morning. It's Monday, 8th of June 2020, and this is Ainslie News. Another ETF gold inflow record. Inflows of gold into ETFs broke another record in May as investors continued to flood into gold. The World Gold Council just released their ETF monthly figures for May and saw inflows through May outpace records for any calendar year in only 5 months. In May alone, gold ETFs expanded 4.3%, or 154 tonne of gold worth over US $8.5 billion. Year to date, we've seen US $33.7 billion added to holdings, eclipsing the previous year to date record of $424 billion in 2016. That takes total global holdings to a new all-time high of 3,510 tonne. As you can note from the chart we'll show next, that previous 2016 record was also very different in that it came off that record-breaking month of February with 205 tonne. This time we have 3 consecutive months above 150 tonne, something never done before, and the consistency of inflows was notable too. From WGC. Global gold ETFs had inflows in all but 2 trading days during April and May, 41 of 43 days. The only other historical period with similarly consistent inflows occurred in May and June of 2016, when the funds experienced inflows in all but 4 trading days. The chart next shows gold inflows and outflows since the beginning of this gold bull market in November 2015. ETF flow charts from GoldHub. When viewed in value, not weight, the correlation between ETF flows and the price becomes more apparent, which is shown in the next graph here. As you can see in the next chart as well, the expansion of European holdings is huge, with their 1,537 tonne approaching North America's 1,815 tonne. Arguably, the Eurozone is in a deeper mess than the US, and is also the home to negative interest rates, and so maybe this shouldn't be a surprise. Check out this next graph, assets under management. Famed London precious metals commentator Laurie Williams, writing for Sharps Pixley, has this to say over the weekend. Despite the pressure under which gold and silver prices currently find themselves, we think the momentum generated by the enormous flood of money going into the precious metals ETFs is indicative of things to come for the sector. We suspect that the $1,750 current ceiling for gold will be breached comprehensively by the Northern Hemisphere fall, and $2,000 gold will not be too far behind, although there will be periods of resistance along the way. Anecdotal reports suggest that demand in India and China, the 2 leading gold consumers, is beginning to turn up again, while the global new mined gold production seems to at last be beginning to fall, both because of coronavirus-related production losses and through other factors we are already seeing in Australia, the world's number 2 gold mining nation, and as we've been seeing in China, the world number 1, for several years already. With the accelerating gold-related ETFs rises worldwide, and as the world comes out of the coronavirus lockdowns, gold supply-demand fundamentals may be improving, while what we have to expect to be a severe equities plunge, coupled with perhaps a declining dollar index, should further enhance gold's appeal as the ultimate safe haven investment, which should drag silver up with it. In our view, the prospects look positive for both principal precious metals. More broadly, looking at all transparent holdings of gold and silver, the following charts paint a clear picture of a very strong demand for both metals. Next graph showing weekly transparent gold holdings. And straight after it will also show you the weekly transparent silver holdings as well. Interestingly too, off the back of the huge jump in shares on Wall Street Friday night, on the better than predicted NFP jobs report, this weekend saw a massive jump in online web shop orders here at Ainslie. This may well be people thinking we're at peak BS in the markets, and like all that gold and silver piling into ETFs at the same time shares continue their illogical rally, they are getting their hedge against that unfolding in place. The difference, of course, is Ainslie customers are buying the real thing, the real hard asset without counterparty risk, and not the paper promises of ETFs and futures contracts. That's news today. Of course, you can read this through our website at ainsliebullion.com.au. We'll catch you tomorrow morning.